Hey traders, welcome to a global macro update. We'll be going over mainly the SPX or the S&P 500, the 500 largest companies in the United States. We'll be going over DXY, which is the US dollar currency index, and then we'll be also going over the historic charts on the Dow Jones back in 1930s at the start of the Great Depression. What happened, how the current price action looks very similar to the 1930s in how the structure is laid out, and then we'll also talk about how we're looking at the markets, why we are looking at potential shorts, and we've already have shorts in place we're looking to add for specific reasons, and we'll get all into that within this video. First things first, just looking at different asset classes. We first have BTC or Bitcoin at the top, S&P, and the Russell 2000, if you don't know, is for the small caps. S&P, like I said, is the 500 largest companies in the United States, and I'm sure you hopefully know what Bitcoin is. Now, looking from the high to the low and then drawing a Fibonacci, seeing our key levels, the 618.50 and the 382, we see that Bitcoin is showing a key level of resistance at the 50% retracement. S&P is moving in between the 50 and the 618. It was kind of in between there from the daily candle closure high to low, and the Russell 2000 has not even broken the 382, so it hasn't gone above 38.2% of the high that we've recently hit. So small caps, obviously, with more speculation. There's definitely fear in the marketplace, so there's less speculation on small caps. And it seems like S&P is obviously getting more of the stimulus in this current situation that we're having here. So let's now go to the S&P 500. This is the 4 hour. Let's actually look at the 1 hour first. Or sorry, the daily chart. Let's first discuss what we currently see, and then we'll jump into the 4 hour time frame. Because that's the key time frame I'm looking at, because I am a swing trader, but we are looking for a potential very long hold here because I am very bearish on the economy. It's unfortunate to say, but you know, it's the reality of the situation. And as a trader, we are looking for opportunities. The fundamentals could not be more bearish. 25 million people are currently unemployed, filing for unemployment, and you know, it's continuing. It's not really seeing too much of a slowdown, which is sad to say. And then obviously oil is a complete other monumental historic event all on its own, not even tied, well, it's tied to COVID, but it's a monumental event on its own. And then COVID, with the lack of demand for the product, is just putting them in a hole that obviously is very hard to get out of. So looking at the chart here, we're looking at two May zones, 618 and the 50%. Like I said, we reached a high of around the middle of the 618 and 50%, and we've broken our ascending support connecting the higher lows. We are pulling back, and when we do look at the smaller time frames, I can see a nice little ascending zone break created a descending triangle pattern. So then I do have also an example of something similar that happened on BTC, which we'll get into later. But in terms of the price action, it's following market structure pretty well. We are now holding a key level of horizontal demand, and then when you look at key structure changes from an uptrend to a consolidation to a downtrend, you're looking for a series of higher lows to stop, and then you're getting a consolidation, not being able to really make a higher high. So what we're looking for is ideally a descending trend line connecting the lower highs, or at least a horizontal zone that is able to hold the price in a consolidation. And now we'll get into the 4 hour chart to discuss the current price action. So this is the 4 hour chart, like I said before. Let's take a picture of it yet again, and then we'll discuss what we currently see in basically this middle of March until now. We've seen a huge pullback, hit in between the 50% and 618, and then we see that the price made a high, higher high, higher high, but then on the smaller time frames, we started making these lower highs here. We drew a trend line. There was a tiny little descending triangle there on the, let's say, 15, 5-minute that did break down, retested, pushed to the downside, and now we are holding just above this support here at around 2,700. That's going to be our key break, and that's what we're going to be looking for a potential move to the bears, where we're going to have a solid shift where sellers are really going to take charge. So basically, that is the current structure that we see. If we do see a push to the upside, that's definitely going to give me a lot of hesitation in terms of adding more to a position because of the series of lows getting broken. But at the end of the day, I am expecting this supply zone to hold. If it does break the 618, my bias has to change. Unless there's a wick and then it comes right back down, then I could still have a bias of a bearish sentiment. But if it does continue to push to the upside, basically the Fed is destroying the dollar to save the stock market and not really the economy. You can't really save it at this point. If millions and millions of people are out of what they want to do in getting basically UBI, that's not really a fulfilling position to be in. If you love your restaurant and it's closed or something along the lines of that, it's very difficult. But that's kind of the current situation that we're seeing. If it doesn't actually break to the downside, yeah, then I would be basically looking at gold and BTC cryptocurrency markets to soak up the investor speculation that is a safe haven, where gold has definitely stood the test of time. BTC obviously is getting tested now. I don't think the test is over. It takes a lot longer than a couple months. This is like very recent, right? Like this is when we really started. End of February really is, middle of February is when we really started to see the market drop. So it's very early into this bear market. I still think that BTC is going to outperform gold in terms of price appreciation for investors using it as a safe haven and a store of value. We live in a digital age. There are definitely benefits of having a digital store of value compared to a physical. I know you can tokenize gold, but that's basically still using blockchain. And that said, that is the completion of the S&P. Now we're going to go and look at BTC and the breakdown that we saw during, I believe it was end of January. We'll look at it right now. I guess a similar time. End of January was the starting, and then we saw the breakdown in February and especially March. So let's just take a picture of this. And then hopefully you see the similarities where we do have an ascending channel within BTC, whereas the current price action of the S&P is more of a wedge, where you have a less ascending resistance and a more ascending support, creating a squeeze in the price, whereas this current structure that we saw in BTC is a series of higher highs and higher lows that is not really creating a squeeze. It is just an ascending channel, and then you're looking for a break in the key level of support, which is connecting the higher lows. And we can see that right here. We initially got a break down below the support zone. We did get a pretty aggressive retest that we saw, but it was in confluence with our high, our lower high, and our lower high, creating our zone of confluence there. And then that created our triangle. And once that broke down, we saw a nice squeeze, which was, you could call it an ascending trend line, an ascending wedge. Let's just draw that a little bit better. Let's get our tool, and we could draw it like that, something along the lines of that. And then we saw a huge breakdown. And I'm not saying that we're going to get this aggressive of a move. Obviously, with circuit breakers and regulators basically controlling normal free markets with stimulus and with circuit breakers and all their other shenanigans that they pull. That's obviously not free markets, and I don't really advocate for that. I would personally rather see central banks not play a role and have a protocol or a program like BTC provide the monetary system, so then it's predictable. I'm not going to have anyone overreact like they're doing right now. Every action has a reaction, and the amount of money that they're printing will have a reaction. It has to. It's not like $6 trillion of money printing will not have any sort of reaction within the economy. All it takes now is just the velocity start back up, because it's plummeted off a cliff with lockdown, obviously. So I hope you understand the similarities that we have with the BTC chart back in February in the breakdown, where you saw the descending triangle breakdown. You saw this continuation pattern, and now we're going to look back at the 1930s to see a very similar structure. So we're going to close this. We're going to go back to this page. We're going to go to DJI. This is 1930s Great Depression. This is the first initial smackdown here from August 30th, 1929. And the low was November, let's say, 14th, 1929. And then the consolidation upwards was from November all the way until April. They take a long time, right? But then in this situation, I just think that this fell faster because they didn't have as many circuit breakers. I don't exactly know if they did, to be completely honest with you. I didn't do my due diligence on that one. But, you know, with the amount of, I guess, interference that the government is using, does not surprise me. But in terms of the actual market structure in the price action, we see that it's actually very similar. Let's go back to what we currently see in the market. We see a nice ascending wedge with the price connecting with a series of higher lows. First rejection, second rejection right here, very well respected. Third rejection, we may see the pullback even come up to form a double top. I'm very all right with that. I'm all right with pushing this a little bit higher. I still have a bearish sentiment, and I view the 618 and the 50% zone in between this area as a key level of supply. Looking at this further, we saw a dump to the downside, which didn't take very long. We saw consolidation. You could view it as a double top with just horizontal zone or a flag, but then let's play this and see what happens. You see a very aggressive move because there's a loss of confidence in this series of lower highs and lower lows. Definitely, once it breaks that support, especially if the gap down with the news, people are thinking, oh my God, the news is catching up to the stock market. Maybe the Fed can't save us. You know, they can't buy everything. There's no more stock buybacks, and over 30 million people have lost their jobs. And it's a global event. It's not like there's one country who is completely fine. It's an entire global pandemic. So, you know, who's going to really be buying if the confidence starts to drop, which is sad to say for everyone, which are long-term investors, but you got to look at it in terms of like multi-decade investments if you are a long-term investor. You know, if then, you know, you might want to think about having some sort of risk management or hedge. That's just not investment advice. That's just what I think. If obviously I'm currently a lot more bearish than bullish, but you know, looking back at the price action, we see that there's a strong move to the downside. Let's continue to see what happens. We got a huge push up. You could draw a nice little trend line here. And then what you're looking for is previous levels of either support or resistance. And when you're actually looking at it, this is the daily, you see a nice consolidation here. We see three rejections of a resistance, first, second, and third. And then you get a dump to the downside, breaking the support. You get a test of the low yet again. Let's continue. You get a very solid bounce of that low. Some last hope here of that recent low of, I guess, 210 back in the day. Let's continue the price action. We get a poke out above the high. So that was the previous high. And we actually closed above it. That would really attract a lot of bulls in my personal view for potential buys because they think it broke the recent low or the recent high. We've tested the low multiple times and held. You know, it's attractive for a bullish potential opportunity, but we inevitably did push to the downside. And once that second low came in, that rejected off that previous one, you know, it's looking pretty similar to this. You could connect a horizontal trend line or support zone like so. If that breaks with the recent low there, you kind of know that all confidence is kind of going to go out the window if it does break that recent low. So let's continue to see what happens when it breaks. You just get, well, actually not terrible, but it wasn't as bad as the initial blow. But you definitely get a severe move here. Let's just see, you get a push to the downside, a pull back, and then you're looking for the meat of the move, 18% low, 20%. That's a significant move, and if you're looking for entries around this key level of supply that we're currently at, you could catch some unbelievable opportunities in my personal view in terms of risk reward. Let's just continue on. It just continues downwards for a very long time here, but looking at how this structure played out and how this structure currently looks in the market, I think that they are pretty similar in terms of the price action. You see a massive move to the downside. You see a pullback to a key level of supply. You're looking for weakness. You do see, if you're actually looking on the smaller time frames, a lower low that came into the market. So theoretically, you could draw a potential trend line connecting the lower lows, and you have a descending channel. Yes, that could be a bullish opportunity, but in terms of the fundamentals, in terms of the overall structure of not just the 4-hour, but the daily chart, the weekly chart, basically every time frame, if you're looking at it, in my view, because I have a bearish bias, could identify it being a potential sell. So that's my view of the current market. We do notify our premium members when we do enter, and we do have exposure to the short side using contracts for differences, or CFDs. They are somewhat similar to futures in that you trade a contract that is trading the underlying asset, so you're not actually holding it. For example, on Binance, you're actually purchasing Link or XRP or BTC, whereas on these derivative exchanges or using these contracts for differences, you are trading a contract. You're not actually trading the actual asset, and you don't get any delivery, whereas futures, you do get delivery. And we did see some people get roasted pretty bad by buying oil futures, and then what do they do with the delivery, right? Difficult situation. But yeah, that is my opinion of the S&P. Hopefully you got some entertainment from it. This is not financial advice. Always do your due diligence. Get multiple different sources and really think about it for yourself. And we wish you the best. It's obviously a very volatile time. And manage risk well if you are using heavy amounts of capital to trade. If you are like a perma long investor, if you don't plan on holding for like 20 years, just think about the wait time that you'll have to have basically in order to get back to break even. But we really hope you enjoyed the video. We will answer comments at the completion of this recording. So if you have any comments on YouTube, if you are watching this recording, drop them in the comment section below. And until next time, have a good one.